Ladies and gentlemen, boys and girls, we are back. And like I promised in the last video, if you guys drop in the comments down below the indicators you want to see next, I'll do it. The last video I did was over the EMAs, just in general, right? And somebody wanted to do the Bollinger Bands, so we are going to do that. First and foremost, I was actually going to do all of this inside my course. I don't really use indicators, but I thought it'd be cool to have an educational portion of it. So instead of just doing it inside the course, I'm just going to make these for YouTube, including the Bollinger Bands. There is I'm pointing to my monitor like you guys can see it. There is a video I have out there. Now, anytime in my thumbnail it says ONR, it stands for obviously not real. But I did make an ONR video about Bollinger Bands. We'll get to it in a little bit. But I've always joked around about them, and that's just because I don't use them. The idea of them are kind of silly, some of them, right? But anyway, they're not clickbait. I still don't use them, but it's just, here's what they are if you're going to use them. Kind of here's my take on it. It's something people have asked me for a while, but I've always just kind of laughed it off because why? Like everyone has their own strategy, and I've said this before. There's many ways to skin this cat as far as like trading or investing, kind of. There's just so many more ways to do it wrong. So just because I don't do it doesn't really mean anything. But so if I've ever made fun of your indicator, that's why. Still been doing this 11 years. I've seen all the indicators. I've tried them all out. I'm only human. If there was an indicator that I could just turn on and it worked, oh yeah. Every video would be about that, and it would just be how much money we made off it. Of course, why wouldn't it be? Let's jump into the screens. The screens. You see, we have a what looks like a deteriorating snake on the screen. So what you see here are the Bollinger Bands. It's an analysis tool in trading, and I do have notes on this. It was developed by John Bollinger himself, the one and only, in the 1980s. Yeah, back then you had to send smoke signals to your broker, and then they would place a trade for you. Sometimes that day, What this ultimately does is it kind of it's supposed to identify the volatility and trends, and people do say potential buy and sell signals, and I would take this with a grain of salt. This one it's pretty awesome visually because you think you might have it figured out, but when you really break down what it is, it gets a little bit more, why did it bounce off that line kind of thing. Okay, so this actually consists of three parts, and you'll see, and I'm talking about this clouded area right inside here, and we can just really zoom in. You have the middle line, the upper line, and the lower line. Now this is just clouded in here just to kind of show it, right? So all this really is you have the SMA. It's a 20 SMA, so simple moving average. Takes the 20 candles. Now, again, this is still lagging just like anything else. Someone in the last video even said, like, hey, when would this the question was, when does this show us a time where it bounced off the zones before the EMA moved? And if you look at my strategy, just looking at price action in general, looking for buyers and sellers, that's always first, because this doesn't get the information until the candle closes. So once that candle closes, it'll take that data, takes the last 20. And oftentimes, if you just put this out there, people love to change things around it and make their own strategy and sell a course about it. This will be a 20 SMA right here in the middle. Then you have the upper and lower bands, which are two standard deviations outside of this price, not the stock price. So I watch the standard deviations of what market makers are expecting. Now, we use the options chain to determine that. That's real money on the table. This is a standard deviation of the 20 SMA. Okay, so just like anything else, you have expansion and contraction is the big words people love to say. And again, I make this joke a lot because they'll see this indicator and they learn big words. And this is how you can spot someone that probably just doesn't know what they're talking about. A brand new trader's like, I buy low and sell high. But once they've learned an indicator, and it's the pinky out when they sip their tea or coffee, like, well, I wait for expansion and then contraction. And they just use the words with nothing. And all it really means is if you were to take this point right here, see how it just gets wider? That's expansion. It's expansion and volatility. And then you see things get quiet. There's your contraction. So it's not in the news. The volatility is just not there. It's cooling off. It's settling down. And there is a heads and tails to all of this. Some people will wait for that, and then they want to play the volatility for the breakout above or below, right? They want to play the breakout in general. Some people think, hey, this volatility's here. It's time to get on board. And honestly, right now, this shows off more why it wouldn't work than anything during this time period. Okay, so we know what expansion and contraction. Obviously, when volatility increases, the bands get wider. When it decreases, contraction, right? Okay, so now I guess we'll get to the retail part in a little bit. Breakouts, it's when the price breaks above the upper band, just breaks out outer. We'll just outside of the band. You can say above the upper or below the lower. Like here's a breakout right here. Here's another breakout. Here's a breakout. Now all of these were false breakouts. If you played that breakout, you didn't make any money. But this is not a course on how to sell indicators. This is just what the indicator actually is. So you have that. You have the trend identification. Price moving outside the bands technically indicates a strong trend. It does. It also we'll stick to the notes for now. It indicates a strong trend. Kind of like this, if you don't understand it, you're going to hate me for this, the RSI, the relative strength index. When you think something's overbought, that strength is full bore, full tilt, headed that way. Okay, so you have the trend identification, and obviously just the lines going one way, prices moving outside the bands, just makes it stronger. What I think a lot of people use this for, it's been a while since I've actually spoken to someone who uses these as their trade, but that mean reversion. And now a lot of people with SMAs or EMAs, if there's a mean reversion trade in there, there's usually some kind of SMA line out there, and they think it gets a little carried away. They're going to play the bring it back in approach. So price returning to the average, right there in the middle. And then there's just bandwidth in general. Increasing bandwidth indicates obviously increased volatility, and then vice versa, getting down below, which kind of like the heads and tails we already talked about before is. How do you interpret yourself the volatility in general? When you see it really squeezing like this, are you looking for the break finally? Or do you wait for volatility to get in and then kind of take maybe an oversold approach and put it back? Now, in my O&R video, so I'm going to talk about how, and I actually had to Google this, how retail traders use this because it's been a while. So in my O&R video, again, stands for obviously not real. I actually came in here, made it completely black. And then I said, here's how you trade Bollinger Bands. I said, you wait for it to get outside the bands. You color this thing in dark because that doesn't matter. And when it gets outside, you take the opposite play. So like right here, you would go long. Up here, you would, let's make it dark. You would go short. You would go short again. You would go short over here. Now, back when I was doing this, I was in a group with Ricky Gutierrez called Learn Plan Profit, LPP. There's no link or anything in there. It's a basic how to do stocks course, right? He's a popular trader, and he does something that I think everybody should do, trade the same stuff. Now, he just trades an inverse ETF, but there's a lot to be said for mastering just one or two, a handful of stocks. I trade the same stuff every day. But I had made the O&R video as a joke, right? And now I'm not a comedian. I try to be funny sometimes. But someone actually took that seriously. Apparently what I had said made a lot of sense. And honestly, if I was going to trade the Bollinger Bands, that might even be how I do it in real life. Anyway, I get a message. This guy tags me in the chat. Hey, I saw your video. I've been killing it ever since. And I think that was one of my last O&R videos because I was like, oh my gosh, if people just don't understand, holy crap, they're just taking stuff off the internet and doing it. It can be a dangerous thing, and it's obviously not my fault. Figure it out, like that's kind of always been my approach, which is another reason why, even though this did happen years ago, another reason why this is just going to YouTube. Let's at least get the basics, out there as far as indicators go before I start making fun of them. But honestly, if I had to trade the O&R bands, the Bollinger Bands, this would probably, I would rather just trade this strategy. I wouldn't care about a mean reversion to 20 SMA. Like, it's all right. I wouldn't care about expansion because you'll see here. I mean, look at how many times we get to the upper. Imagine going short at the upper band. That thing's going to pull over and push up. And you've heard me say this a lot. Stocks pull over or they pull back. And all we did was just kind of chill right here along this line. And all this line is 2 standard deviations away from this line right here. So in my head, there's some discrepancies as to why there should be buyers or sellers there outside of the fact they are just using the Bollinger Bands themselves. And that's it. Now, Bollinger Bands is a very popular indicator, so I bet there's a good group of people doing that. But that being said, mainly someone who focuses on price action, that doesn't make sense in my head, which is why I don't trade it. I would much rather take the opposite play when it gets outside 2 standard deviations. A lot of people have asked, would you ever change it to 1 standard deviation? It just makes it skinnier. No, not really. I don't know what you would take away from that. All right, but what I found, the retail way of doing this was range-bound trading, buying near the lower band and selling near the upper band. So when it gets down here, hits the lower band, they're buying, and they're selling at the upper band. Now, depending on when you did that, now this would be a great trade. Now, this is what sucks about indicators, is I can come on YouTube and tell you every time that would have worked, and I can really just glaze over how many times it didn't. Case in point, watch every YouTube video about a head and shoulders pattern. Those guys will show you every time some of the weirdest ones ever. Like, oh, it panned out, and I can show you every time it doesn't. There's a lot more of them, put it that way. Fun fact, while we're on that, someone did a study on patterns and I think indicators, and the head and shoulders for 1 year, it did make it to the 50-50 mark for like a couple months. Everything else, if you were to, I'll need to find that study. Not even close to the 50-50. It was more like an 80% chance. So anytime someone's talking about that, had you taken the opposite play, you would win probably 80% of the time, if not more on some of them. Anyway, neither here nor there. So hits the green band I have here on screen. You sell when it hits the red. So maybe you would have bought somewhere in this vicinity. This is the S&P 515. Maybe you would have sold it around here at 549 if you didn't sell up here. What are the likelihood of you actually doing that? Because you could say, oh, I would have sold way up here. Would you have? Honestly, you could have trailed and made that a great trade. And maybe pairing this in your strategy with something else might make it just that much better. Look at this as a side, not the main course, you know? So we hit this one, so we're gonna sell. You sell to open. Maybe we go short. You would have bought it back right here and missed out on this. Maybe slept in that day. Blasted right through. Another great trade. You would have bought right here. You would have maybe added on right here and then sold. I don't know how you would do that. What are your parameters for that? You could have bought right here. Now, that went down. Maybe you added on, popped back up. Now, right there, you would have been green for a little bit. And if you are new at trading or bad habits, you might think, take your money and run. Maybe as a gambler, you could have made some money. Then it would have sold back off to here. And I guess you just keep adding on because the only thing this is indicating is a very strong trend down. So I kind of have a problem with that, or it just needs to be worked. There needs to be some rules or parameters to that. You know, like I'll buy when it hits here. There needs to be a clear exit. You know, otherwise, we can just add on the whole trend down. If you add on to every trend down on the S&P and never tag out, as of right now, as what history says is you'll be green every time. It might just take longer. That's the only ticker you can do that with. Everything else might just continue to go to zero, and then you're in trouble. Okay, so I guess you would have bought right here. My head's in the way. Okay, here we go. You would have bought right here. You could have sold here. Could have trailed it, maybe continued that thing up. You might have really been in a really decent trade. But every one of those times it breaks out of the green band. So that's really more my strategy, what I said. Let's go with tagging the green. Could have tagged the green, sold right here. A bunch of little not intraday. We're on the 4 hour. Could have bought here, sold here. Maybe. Trend following interlong positions when price. Okay, now here's the one I had a problem with when I did look up. There's 3 popular. I just tried to Google the 3 popular ones. And that was range bound trading, buy near the lower band, selling near the upper band. So we're not even touching it. Just kind of kind of getting close. Get your beer goggles on. As long as we're there, if you could squint, it's good. Trend following. Enter long positions when price breaks above the upper band, and short positions when price breaks below the lower band. I've already shown you how much you would just get decimated on that. I don't know who put that article together. And if I'm ever going to mention someone's name, or if I'm going to say something bad, which is why I'm not outing that person right now, I'm not going to say their names. If I ever say their names, just because I don't, they're either okay, they're good, there's some kind of level of respect. The internet has enough bad opinions, so if you ever hear me, if you think I'm saying something bad about somebody, and I'm not saying their names, it's 100% bad. Anyway, let's get back to it. Okay, so you want to go short when it breaks. That would work right here. You would have gone short breaking below that band. Okay? Depending on when you went. Now, that band closes at the end of 4 hours. You had 4 hours over here of like, we'll see. And then that would have panned out right there. Broke below right here, so you entered short. Got smoked. Maybe you bag held. I would not want to bag hold short the S&P. Okay, so you go short here. Would have panned out. I guess you would still need some kind of exit strategy of when do you get out of this sucker, because by the time it breaks 2 standard deviations, the 20 SMA, okay, 2 standard deviations of anything really, you're breaking some things. At that point, we probably are entering. It's about to be a crazy trend down, and it's kind of like the death cross. Things have already happened. You're very late to this trade, and you're about to really kick this thing off. That would have been great in 2020. When everyone's losing their minds about the Rona, right? And things were just gapping, going. We did not take the elevator down, okay? We didn't even take the express route out the window, right? We kicked the exit door. We were flying in a Boeing, and the door fell off, okay? Third world country, though, because those fall down. They don't fall down in the United States. We were in a third world country Boeing in 2020. Now, had that exited the Bollinger Bands and you went short, you would have made money because the trend did continue on that. But right here, breaks above, so you go long. The market basically just said JK and sent it south. So then what? Do you enter short down here? Can you imagine if that was oversold and bounced? What if this didn't break the 2 standard deviations? You went long right here, got absolutely decimated, and then you went short right here. That's a combo punch. That's you jumping in the ring with Mike Tyson. It would not pan out. And I don't know where it would have. You would have went short right here. That ripped your head off. Let's just go to where the indicator would work, I guess. You would need a strong trend. No, even in this, it completely encapsulated the whole trend. Here's something. Would have went short here, okay? Couple days, you're good. The whole market corrected, so that was in your favor. You would have went short there. I don't know when you would have tagged out, but we broke the upper end right here, right around break even. You had some green and break even days. Let's just get back to the let's get back to where it would work. Let's check out the Rona. All right, so everyone's losing their minds. Gaps down, breaks out. You go short here. We're in just send it mode. I don't know when you would get out, but you might have gotten out there. Got right back in here if you weren't already in it. Okay, a little bit of red days. Got back in. Hopefully you didn't tag out. Can you see how much you would even, depending on when you got out of that trade, you might have actually got in short, tagged out on one of the craziest trends down. You would have lost. Can you imagine that? You are short the market during one of the biggest, borderline, it's not a flash crash, but it was beginning to rival it, and you lost money. That would be nuts. Visually, this indicator looks kind of cool, though. All right, what was the last one? Bollinger Band squeeze. Now, if there's one, I have heard of this one a lot. Trading the breakout when the bands contract. So a lot of times it's sideways, it's boring. And I would say this one's probably the better of the two we just listed off. because the bands are contracting, and what they're thinking is breakout. Sometimes that comes with some energy. Enough energy, and it could pay quite a bit. But essentially what you're doing is here comes a squeeze, and you're going to take a position long or short, and then hopefully it sends it, right? So maybe if you just waited for this, you have your 50-50. You have your roulette trade. Now you might think right here, here's the contraction. Now we're rallying in this. We might be pulling over. We continue the trend up. There's your bull case. Here's the leg in. You might think bull flag style. Here's your leg in. We went flat. Get ready for the leg up. Someone on the other end of you thinks, no, here comes the high. We're going to sell off. And he would have been right for a little bit. Then we would have continued back up. So of those, I would say that's probably, of the three, the least one I'd be worried about. I don't know how I would word that. The first two sounded absolutely insane to me. But I guess since 95% of people lose, maybe this isn't the 95% category. Maybe it's just one you want to steer clear of. That's not for me to judge. All I'm doing is, again, breaking it down. My opinion, probably a little bit too much even in this video as far as just an educational one for Bollinger Bands. I don't know as far as like institutional use cases. What I don't really like to, I don't like the what do they call it, bro science. I don't want you to tell me what institution does unless you work at an institution. Now I've heard people say, oh, they use this to gauge market sentiment. And I can tell you there are way better tools out there as an institution to gauge market sentiment. So I don't know if I'm falling for that one. But if you're to look it up, if you're to ask around, some people will tell you an institution uses this to gauge sentiment or to confirm trends. I don't know why out of everything you have out there would you pick this one to confirm a trend. Someone said they combine it with other things, and like that's still a bad excuse. Okay, and then someone said risk management, and I'm speaking just from my experience on this one. Again, I can't think off the top of my head what institution uses Bollinger Bands. I really don't. Maybe in the 80s, it was a little bit more important back then, but I've only been trading since 2013, so. We're actually coming up on the 12-year mark. So I don't know. I have what people have told me. I'm just conveying that to you, I guess. I don't know where you would... again, someone said they set their stop loss and their take profit based on these bands. And if that's the case, I could probably show you a couple times that would have worked. I can show you a lot of other times that didn't work. Kind of like back when I just showed you in 2020 where you would have got in, you would have tagged out, and you would have lost money going short during one of the biggest sell-offs we've ever seen in the market. Congrats. Again, maybe if you use this and you trade at any kind of level, I don't mean to talk down at all by any means. I would genuinely love to hear from you and maybe what your strategy is. Because this one of all, I do think it falls under the popularity scale. Really does. I mean, I can tell this to anybody like, oh, yeah, I've used it or seen it, right? But then when you break down what it actually is, what are you using it for kind of thing? And then that's kind of where it goes like, hey, this is a pretty cool visual. You see the expansion. Hey, volatility, stay back. Kind of like a rattlesnake. I don't know if you guys have those where you're from. They start rattling when you get close. There's that signal, that initial of, do I want to proceed with this? And this visually at least gives you something. Hey, we're expanding. Something's up, okay? Maybe you dive a little bit deeper. We're contracting. This is a boring, quiet place, you know? What's lurking around the corner? What monsters are under the bed? What's about to come out and really scare us? Or did the stock market forget this one exists? Probably not the latter, but did I say that right? The latter. Is the latter the second one or the first one? You know what I mean? If you don't, sorry. I don't know how you would combine this. In that same article, by the way, it said to combine this with fundamental analysis. And that to me is, I wish it would have said that at the top because I would have never read the article. The last thing you probably ever want to do is combine an indicator with fundamental analysis. Why would you take technical analysis? essentially a math problem. You know, this point equals that, okay? We have a world full of emotion and humans driving this. Algos are still controlled by the humans. Parameters still put in by the humans. I don't know if you would ever hear me say that out of my mouth. I don't know what story, chance, or world you would live in where you're thinking, okay, fundamentals are strong, check the Bollinger Bands. Do they line up? I'd be hard-pressed on that one. But I could probably ramble on much more. I don't know how much more you take away from me rambling. That's just the old Bollinger Band situation, I guess, if you will. I'm curious to know how many of you guys use this. This did show up in the comments, so someone out there is curious. And now I'm curious. Is it just the curiosity of this because you've seen a couple people do it? Now that you know what it actually is and what it means, what would be your strategy on this? You know, and I'll end that here. In the comments down below, I want to hear your experience with this. Did you ever try it? Obviously, it didn't pan out, or you'd still be doing it. Or maybe it is. Maybe you're just killing it on this. Honestly, I want to talk to the guy that said he's killing it after watching my O&R video. I wonder historically how well that would pan out. I did that, guys. Again, I sat down. I was like, someone said I should make a joking video. I said, I'm going to make one over the Bollinger Bands. And it took me 3 seconds to come up with that. But someone's killing it off that. So now I'm curious. But I'm going to pass it off to you guys. I want to know your experience. And then another popular indicator you want to at least know about and may or may not have my opinion on. I'm going to try to keep these very unbiased, very educational. And that's kind of where I'll keep it. But anyway, I'm going to wrap it up here. I will see you guys all in the next one. Make sure you do all the things, hit the buttons, and I will see you guys in the next video. Have a good one.